This is BBC News. We'll have the headlines for you at the top of the hour, which is straight after this programme.
Hello and welcome to the programme. Here's what's coming up this week. The anguish in Asia. President Trump's trade war is all about putting America first. But where does it leave its biggest trading partners, particularly those in Asia? From China to Vietnam and Thailand to Taiwan, many of Asia's economies have thrived with the help of exports to the United States. But tariffs and disruption could derail their growth. I'll discuss that with these two. This leading economist will explain what it all means for China, as the world's second biggest economy tries to solve its domestic problems whilst facing down President Trump. And the Indonesian president's special envoy on international trade explains how her country and others in Southeast Asia might limit the damage of tariffs. Plus, tackling tariffs with technology. We'll hear from the boss of a tech giant using AI to help many of the world's biggest firms keep their customers happy despite the disruption. Wherever you're watching, welcome to the programme. Now, President Trump's trade war is being felt in all corners of the globe. The leader of the world's biggest economy is using tariffs and other measures to change the way his country does business. But Asia is feeling it more than other regions, faced with some of the highest tariffs. Over the last half-century, Asian manufacturing and American consumption that fuels it have been the two major pillars of global economic growth. On the 2nd of April, President Trump laid out plans for tariffs on most countries. There's a 10% baseline import tax, plus higher rates that vary by country. Those, though, have been suspended until July to allow time for negotiations.
For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike. American steel workers, auto workers, farmers, and skilled craftsmen. We have a lot of them here with us today. They really suffered gravely. Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. It's not going to happen.
Whether that's true or not remains to be seen. But one thing that is happening is change. That includes to US-China trade. It was worth $582 billion last year, making the trade relationship between the world's two biggest economies one of the biggest in the world. It's likely to fall this year because of US tariffs on goods from China, that, depending on the product, can be as high as 245%. In response, China has announced tariffs of 125% on the stuff the US sells to Chinese consumers, while other countries in Asia also face steep tariffs on the goods they sell to the US if their negotiations are not successful. The likes of Cambodia, Vietnam, Myanmar, Thailand, Indonesia and Malaysia all face numbers higher than the 10% baseline. Some of these economies are more dependent on exports to the US than others. And now these Asian economies are being urged to work together. At least that was the message from China's president on a recent visit to Malaysia.
We reached a number of important common understandings on taking our broad cooperation to greater depths. In the face of shocks to global order and economic globalization, China and Malaysia will stand with countries in the region to combat the undercurrents of geopolitical and camp-based confrontation, as well as the countercurrents of unilateralism and protectionism. And together, we will safeguard the bright prospects of our Asian family.
The reality is that many businesses in the region are already seeing their sales suffer, as Laura Bicker has been finding out in southern China.
Guangzhou is hosting one of the world's biggest trade fairs as the world's two largest economies wage a trade war. Everything here is for sale, and some of these goods should be making their way to American households. Instead, we're told orders from the US have been cancelled. Firms who once sold to America are in limbo as they wait and hope for talks to end this crisis.
What do you think of Donald Trump?
He's crazy man. He's crazy Trump. And I believe he always changes his mind. I believe maybe 1 month or 2 months he will change his mind again.
In the past, were there buyers from America?
Yeah, like last year, April, like 20%.
This year, zero. Nothing.
Nothing for the US market.
Many companies we've spoken to who sell to the United States have told us they are now looking for alternative markets. The reality is China's economy is still export driven. Around half of its growth in the last year has come from selling goods abroad.
Laura Bicker in southern China there. So to understand more about the impact of President Trump's trade war, I turn to a professor of global economics and author of The New China Playbook that seeks to explain China's role in the modern global economy. Keyu Jin, welcome to the programme. Good to have you here. Now, talk to me about the impact of these tariffs. The world's two biggest economies slapping tariffs on each other's goods. What impact is this having right now?
Well, first of all, enormous uncertainty. Everybody's kind of trying to wait and see, trying to judge on the markets, on investment, on the future. Plans can't be made. And of course, these two countries have very different perspectives on the tariff war. China's government now considers it as a joke and has stopped raising tariffs further and are waiting for the US to come back to rational negotiation.
You understand some of the workings of the Chinese government, don't you? And when we talk about these negotiations that need to go on both sides, I wonder whether there's any way back from these tariffs, or is it just a case of who blinks first?
Everything's on the table right now. The Chinese strategy is to really hit the U.S. hard with the tariffs as well, so that the U.S. suppliers would feel it. Just like the first trade war with Trump 1.0, China imposed tariffs 25% on soybeans, and then the U.S. agriculture states really pushed and resisted, and that led to ultimately the phase one deal. So they are thinking that you got to stay strong with Trump, because if you concede too much, he would ask for more, and China does not want to bring them image that even Trump can bring China down to its knees this time around.
We know China's still aiming for, about 5% growth this year. Is that realistic given this huge economic challenge it now faces?
Well, the unintended consequence of this Trump shock is to give really compelling force for Beijing to stimulate aggressively, to double down on technological innovation efforts, and to really pivot markets. So we are going to expect a huge amount of fiscal stimulus, monetary stimulus, and really support, not only for exporters, but for big consumer demand and so forth. And it's reachable. 5% is reachable. It's just, is that really high quality growth or not? That is more the question.
Yeah, I mean, you're quite right. Lots of governments around the world looking at whether they can pivot to selling elsewhere to avoid these sorts of tariffs. But is that really feasible for a sort of country like China, given how much it produces that the rest of the world consumes? Can it simply pivot from one of its biggest trading partners elsewhere?
The US is simply really large, and it's hard to really replace the US market. But again, given lessons from Trump 1.0, we've seen almost a seamless reallocation away from a lot of the products into other markets, imports and exports, and that's going to continue. So slowly, China has really reduced reliance on the US. And guess what China is importing from the US? Soybean, agriculture products, and energy. These are highly substitutable. Not so much the other way around, because these are intermediate products from China that US companies will have to use to keep the cost down.
We know China's not just facing hostility from the United States. If you look at some of the concerns that European governments have about China, particularly in manufacturing, and you look at the latest row in the UK around the steelmaking process here, does China feel particularly vulnerable or particularly targeted right now?
Currently, the focus is on the US and Trump's ways, which is really perturbing the world economy. And that has indirectly given China an opportunity to build greater alliances and closer ties with even countries like Europe, and also strengthening regional commitments on trade. That said, there is a longer-term challenge to China's growth model. And this is not going to be just tension coming with the US, but tension with all kinds of countries. And the way to resolve this, in my view, is that first, China has got to boost up demand. Demand will solve most problems, its domestic economy, the international problems, but it should also start considering about voluntarily restraining supply, again, exporting still, but perhaps less, and more discipline on the quantity and price front.
You talk about China pivoting to other markets. One of its other pivots has been to service its domestic consumer too. How much further can it push that?
The big opportunity now and into the future is about domestic consumption. China will never be a rich country unless it becomes a big consumer country, not a big saving country. And this is the stage in which it is now. However, there's a confidence crisis, mostly due to real estate and tighter government regulation that is stabilizing currently. You see a modest warming up in the consumer sector and the investment sector, especially when it comes to foreign perception of investment opportunities in China. You see the modest improvement in consumption numbers thanks to the stimulus package last fall. And if the government really focuses on them, and this is currently what they're doing, switching from supply side policies back to demand side policies, and really targeting lower income households, that's going to give China a big push.
And zoom out for us here, because there's so much speculation about what the global impact of these tariffs will be. What's your assessment of quite how damaging it will be to the global economy?
There's a huge amount of uncertainty. And as you've seen in the last few years, just purely geopolitical uncertainty has reduced industrial production, global investment, raised inflation, and reduced trade. So that alone has caused major global impact. And now add to this potentially global scale trade war, and who knows what else as the big bifurcation between US-China starts, including maybe Chinese companies being asked to delist from the US markets. And we've talked a lot about inflation. China's manufacturing anchors global manufacturing prices. Whether you trade directly or indirectly with China as a country, you will be affected by a US-China trade spat. So all of this has just increased the risk of financial crisis and economic crisis in the United States, the decline of the dollar, the slower recovery of China. Look, there's no good news here.
Keyu Jin, good to have you on the programme this week. Thanks for being with us.
Great to be with you. Thank you.
So that's the situation in China. But in recent years, many big US companies like Nike, Apple and toy maker MGA Entertainment have sought to insulate themselves from US-China tensions by looking to other parts of Southeast Asia for manufacturing. One of the countries that stands to benefit is Indonesia. So I've been speaking to a former senior official at the World Bank who is now the Indonesian president's special envoy on international trade. Maria Pengastu, welcome to the programme. It's good to have you here. And we speak to you now. You're there in Washington, D.C. It's the meeting of the World Bank. It's the meeting of the IMF. What is the mood there right now?
I think maybe somewhat subdued in the sense that there is a lot of going on in the global economy as well as what's happening with the U.S. policy. So I think subdued in that sense and revisions of the outlook. But I think given, especially the World Bank, the focus being on, okay, what's the response? Talking about how can we help countries, developing countries, respond and what should be the continued cooperation internationally to ensure that we respond to these challenges appropriately.
What do you think that response will look like?
Well, I can only speak for my part of the world, which is Southeast Asia and to some extent East Asia. And in fact, with the U.S. Reciprocal tariff policy, East Asia is probably going to be the hardest hit directly as well as indirectly if there's going to be increased trade tensions. Let me just talk about Southeast Asia. We have agreed that we would adopt a constructive approach to engage with the U.S. and not to retaliate. I think that was a statement made recently by the ASEAN economic ministers. And second, that we continue to support the WTO rules-based trading system because it has benefited our development in the last 3 decades. Third, and this is very much, I think, in line with the messaging that I'm seeing coming out of the World Bank and the IMF, that this is a time actually where you should be strengthening the resilience of your own domestic economy. And lastly, we should be continuing to engage with the rest of the world to increase trade and investment.
One of the things you talk about there is the domestic response. What can governments in the region do to change their economies? How do you make a long-term structural change when these things change by the day?
Well, I think we should be realistic in recognizing that there will be increased uncertainty. So in that vein, I think we are doing very much, at least a number of the Southeast Asian countries, what we're doing is looking closely, what can we do domestically to improve the efficiency, improve our competitiveness, identify new areas of growth, and also how do we diversify our supply chain. I think coming out of the COVID, coming out of these trade issues that are coming out, everybody recognizes we need resilient supply chain. I can just inform you that in the case of Indonesia, our president has been very clear and has given very clear instructions to our government and as well as to his discussions with the private sector that this is priority for us to undertake the right domestic reforms and regulatory streamlining and so on to make sure that we can increase our competitiveness, continue to create jobs, and find also new areas of growth.
And let me ask you this, how dependent is Indonesia on the United States? I think, 10% of exports from the country went to the United States. Those even that you send to China ultimately end up in the United States because they're raw materials manufactured into something and then in the United States. America is a really key trading partner for you, isn't it?
Yes, Indonesia, all the ASEAN countries have, Southeast Asian countries have different levels of dependence on the US. Vietnam being on the high end, and Indonesia and maybe Malaysia to a lower extent. We export 10% of our exports to the US, but for certain sectors such as garments, footwear, furniture, and seafood, it is much higher. It's like 50-60%. So while overall the direct impact may be low for Indonesia and much higher for Vietnam, for certain sectors the impact will be felt. And these are labor-intensive sectors. They have farmers involved. So that's why we also need to address the issue with the US, and that's why we are here with the Indonesian delegation here having talks with the US.
China's President Xi Jinping calling on countries in the region to make more of that Asian family, that there should be more trade between countries in the region, and that might be one way of navigating some of these tariffs. Is that really viable? Can you replace a big trade partner like the United States by focusing more locally, more domestically?
I think it's not either or. For us, we will continue to engage with the U.S. As much as possible, and this is exactly the focus of the talks that we're having. We want to continue to have the U.S. as an important trade and investment and commercial partner. The U.S. is number 2 trading partner as well as number 2 source of investment for Southeast Asia. And at the same time, we also want to continue to grow the relationship within our region to begin with, and we have regional trade agreements already in place, which can be broadened and strengthened and can add members or have regional cooperation with other regions, say with the EU.
China has also warned, though, that it will hit back at countries that do deals with the United States that are at the detriment of China. How do you play that?
We take the view, and I think most countries in Southeast Asia have a similar view, that we want to be engaging with the U.S., we want to continue to engage with the U.S., and we also want to continue to engage with China. We don't want to be doing it at the cost of either China or of the U.S., right?
Can you have both in this sort of climate right now?
We will try, endeavor to do the best, and that's why adhering to or supporting a rules-based system is important. So in other words, we are all facing, for instance, the potential of Chinese goods that can no longer now go to the US market, going to other markets. And it won't just be Chinese goods, it'll be other goods. So there is this issue about how do we manage this trade diversion. And we should be managing it using rules-based, right? We shouldn't be increasing protection between each other or retaliating. For instance, when you have a surge of imports, you can impose safeguard tariffs. And that is a WTO-supported instrument. And what we would want to do is have very much an open regional supply chain that could involve both China and the US.
You once ran to be the head of the World Trade Organization. Given what you're seeing happening right now, given what the US has said about how it wants to reshape global trade, are you worried? Does it concern you that a system that has been in place for decades is about to be utterly torn up and rebuilt, seemingly overnight?
Yes, there are clear departures from the rules-based system. but we haven't seen the total collapse of the WTO, and the WTO is still there. And as I said earlier, the Southeast Asian nations have come out with a statement on the 10th of April saying that we continue to support the WTO rules-based trading system because it is important. It is providing predictability, and for developing countries, for small countries, the WTO is still very important. So we do recognize that there are challenges facing the WTO now, but we can find ways to move forward, and the WTO does also need to become more relevant and address some of the issues that are on the table now. So WTO can still be and should still be the forum where some of these very principal issues can and should be discussed.
Maria Pengastu, thank you for being on the programme with us this week. Thank you.
Thank you.
So President Trump's trade war is having a huge impact on how countries think about their trade relationships. But for individual companies, it's making life tougher in a different way. Many face added costs and logistical hurdles in making sure their customers can still buy what they're selling. Think of big names like Microsoft, Hilton Hotels, the drug maker AstraZeneca, and the food giant Nestle. They're just some of the thousands of companies turning to the technology of California-based Coupa to minimise the costs and disruption caused by tariffs. I've been speaking to its chief executive. Leagh Turner, welcome to the programme. It's good to have you with us. And first of all, explain what you do. What does your company do?
Yes, Coupa is an AI native trade and spend management platform. We have about 3,500 customers globally, largely global multinationals, and about 10 million suppliers that also use our platform and have agreed to share their data with us, which means that today we have about $8 trillion worth of trade data that we make available to both sides of that network.
What is it that you're trying to fix? What's the problem you're trying to solve?
So what we're trying to help our customers do is deal with either inefficiency or volatility. So let's start with the easiest one. Trade, global trade, buying or selling of anything, is actually a remarkably inefficient process. McKinsey says that there's about 500 million, $500 billion worth of inefficiency in a global trade network. And global trade is about $33 trillion a year. This inefficiency is to the benefit, I guess, of companies like ours, because we can come in alongside both buyers and suppliers and help them become more efficient.
So this is essentially using that data to make their business better, as opposed to being able to predict what will happen. Because it strikes me that, you might have all that data about what global trade has looked like for the past 20 years, but President Trump has rewritten those rules, and actually what's gone before will not come after, and therefore, using past data isn't necessarily going to be an indication about what happens next.
Right. So let me give you an example. We have a customer who is an EMEA-based global multinational. They manufacture skincare products. They've used Coupa for many, many years to create, let's call it a risk-aware, highly adaptive supply chain. And they've seen volatility in that supply chain over many years. As a result, they began to diversify their operations into places like the United States and Mexico. And that nearshoring meant that they could better serve their customers. Many of their customers are companies like CVS or Walgreens, as an example. Today, where they find themselves is that they have multiple sources of production and distribution, that their lower supply chain costs are also less volatile, and that they can serve customers in those jurisdictions at a lower cost to their own bottom line and to that of their customers.
Is any of your data already suggesting too that the world is about to split into, more distinct trading blocks? That, countries will think less about international global trade and more regional. So Asia will look after Asia, the US maybe has to become more self-sufficient, and Europe will do its own thing. Are you starting to get suggestions that's happening already?
Yes, we are. I'll give you an example of an EMEA-based global sports apparel company, one of the largest brand names that any one of us know. Today, they have goods on container ships in the middle of the ocean. They knew where they were going to place those goods based on past tariff policies, and they're now in real time trying to figure out how to best model those trade scenarios or tariff scenarios and where best to place those goods so as to optimize not only their P&L, but to ensure that they satisfy their customer service levels. The decisions that they're making in real time with goods on container ships in the middle of the ocean are to divert those goods to new markets where they can see that trade is either open or that demand is increasing. So we're seeing this rerouting of goods every single day as a result of these volatilities and changing minds and changing conditions.
Have you thought about what any of this actually means for your own business too? What does this mean for you if we start talking about things like the availability of hardware, new technology, chips, AI tools, all subjects, of course, to President Trump's tariffs? It puts costs up for everybody, I guess, including you too, right?
It does. Over the course of 19 years, we have diversified and we operate across the entire globe. As a result of doing that, we now engineer our products in a variety of different places, not just the United States. And that's good. We have the advantage of scale in that we have had to diversify over this tenure, and as a result can moderate the way that we behave as the pressures increase and maintain the flexibility in our own balance sheet.
Leagh Turner, good to have you on the programme this week. Thanks for being with us.
Thank you very much, Ben.
That's all for this week. For the latest business news, check out the BBC News website and app. Thanks for watching. We'll see you very soon.
Hello, our weather is set to get a lot warmer